You are welcome to Remit Forex Academy. My name is Paradise. In today's video, I'll be showing you how to make $50 per day trading. Okay, so this strategy is very important and is going to be straight and simple. So watch the video till the very end. If you are new to this channel, please support this channel by leaving a like for this video, subscribe and turn on the bell notification so that you receive updates like this whenever I upload a new video. Also check the channel for other forex videos and educational content, including technical analysis. As we all know, every good strategy in the market have rules, and those rules are checkpoints that you must need to look out for and place your trade when all of them are obeyed. So in this very strategy, I'm going to be showing you the rules right now. So the rules, number one, is identify the market trend on the higher time frame with SMA, that is simple moving average. So the first thing is we go to the higher time frame and identify the market trend. I'm going to show you that in a moment. And then the second thing here is to look for market entry on the lower time frame using divergence with the MACD. And then the third thing you have to look out for in this strategy is use trend line breakout as entry confirmation 1, and then you use BOS, that is break of structure. That's what BOS means, as entry confirmation 2. And then the 15 year is your stop loss. So you place your stop loss slightly below or above the previous support or resistance. What this means is you place your stop loss below the previous support for a buy position and slightly above the previous resistance for a sell position. And then the last thing you must do for this strategy is your take profit should be 2 times your risk. That is, anywhere your SL is, your take profit have to 2 times below that. And I'm going to show you that practically on the chart. Remember, this strategy work on every pay and any time frame, but preferably I recommend the higher time frame for this very strategy. And remember, this is not a gold mine. All strategy have loophole and its pitfalls. This strategy have 80 to 85% win rate. So let's dive right in. So the first thing you have to do is to open your usdjpy chart, and for the 4-hour chart in this case for the higher time frame, and then I'm going to be using the 1-hour chart for the lower time frame. The second thing I have to do is to go to the indicator section, and then I would type simple moving average. Okay, so moving average simple is the same thing with simple moving average, and then this will appear on my chart. I have to change the setting of this moving average to 70. Okay, so that is a setting, you change it to 70. So what this does is that it helps us for trend identification on the higher time frame. So as you can see in this very area, we see a change in market direction at this very point. So from this very area, market begin to move to the upside. So the moving average help us identify the trend. And then the second thing is the lower time frame. So the lower time frame, what we want to use for our entry is the MACD. So we want to put on the MACD indicator. So once we put on the MACD indicator, you see the MACD indicator is already on the chart right here. And then if you look at the strategy, we want to see where we see divergence on the MACD when the higher time frame is in a pullback formation. Let's say, for example, you see the market move all the way from here upward and then retracement or pullback. We want to look for divergence around this area so that we can enter the position for the next impulsive move. The same thing, market pullback, we want to look for divergence on the lower time frame, in this case 1 hour, for us to know when the next impulsive move is in motion. So all you need to do right now is to go back to the 1 hour chart. So if you look at this on the MACD indicator, the market move all the way from here to this point and then retracement that we see right here on this very time frame. And then from this very point, market come back to the downside. If you look at the impulse of this motion, market move up and then come back right down. At this very point, we have to draw a trend line. So a trend line from this point to this very area. Remember, we are using the trend line for confirmation and also break of structure. and then this is a divergence on the chart right here. So we want to connect the divergence that we see on the chart at this very point. You see from here downward, market move down, and then from the indicator, if you take it from this very point, exact same point with this and this very area, you discover that the market was trending upward on the MACD histogram, but on the chart right here, market was sloping downward. So that is a divergence. And then this, our trend line right here, is on the chart at this very point. So this is a false confirmation of a breakout of trend line, and then we have a break of structure at this very point, right at this very area. So it is this very candle that will prompt us to enter the position, this very candle right at this very point. So this is what you must have to do in this strategy. It's very simple and straightforward. So after the formation of this very candle, we want to take a buy position, because on the higher time frame, which is 4 hour, the market is in an uptrend. So from this very point, we want to take our buy 2, and then from this very area, remember our stop loss have to be slightly below this very support. Slightly below this is our stop loss, and then we have to use 2 times what we have. So in this case, we have our stop loss at this very point, we have our entry at this very area, and then our take profit is 2 times our stop loss, which is at this very point. If you notice from there, which is our entry to our stop loss, we have 94 pips. And then from this very area, our entry to our target, we have 190 pips. So this is exactly 1 to 2 risk reward ratio. So this is the first trade you should be taking on this very pair with this strategy. And then the second entry presents itself around this very area. If you go to the higher time frame, see the market begin to retrace, and then the next move on the lower time frame here, we see this play out clearly. So the first thing is identification of market divergence, which we see on this very area on the chart. So from this point, and then you draw the same on the indicator from this area, you see divergence. And the next thing we want to look out for is a trend line breakout. So from this point, market breakout on the trend line at this very area. And then the next point where we see a break of structure is this very area, because if you look at this resistance, market come back down a little bit and then move upward. So this is where you're supposed to take a trade, because this is where we see a break of structure. Market creates a new close that is higher than the previous close at this very level of resistance. So we take our buy 2 and place it at this very point right here, and then your stop loss is slightly below this level of support. So we place our stop loss at this very point right here, and then your take profit have to be 2 times your stop loss. In this very case, if you look at it very well, you discover that your stop loss is 113 pips, while your take profit is 229 pips. Okay, so this give you 1 to 2 risk reward ratio. So this is a buy position. This is also a buy position. This strategy is very simple and straightforward once you follow these very rules. So the same apply to when you want to take a short position. If you want to sell the market, you must see a clear trend that signifies that the market is coming back to the downside, and then you go back to the lower time frame. In this case, we see the market begin to go back down on the 1 hour chart usdjpy. So the next thing you have to do is to look for sell opportunity with the MACD 2. So in this very area, if you look at this very chart, you see the market was moving upward a little bit. So we have a divergence on this very pair to the upside. And then if you look at the MACD indicator right down here, you see the market was sloping downward. So from here, we have a slope to the downside from this exact point to this very area. Market slope downward. So from this point, we see a divergence. The next thing is we want to see the market break out of the trend line. So the trend line right here is from this very area to this very point. So we see a breakout at this very point and also a break of structure. So our entry is supposed to be at this very area, because at this very area we see the market create a new close, okay, a new close that is below the previous close at this very point. So we are entering at this very area, and then the market have already break the trend line. So what you have to do here is to take your trade, and then your stop loss have to be above this level of resistance for a sell position. So if I take my sell 2 at this very point and I place it at the entry at this very area, so in this case, my stop loss is at this very point of resistance with 75 pips, okay, for the risks, and then the market come back down from this entry into this very point of take profit, which is about 192 pips. So in this case, you've made 1 to 2 risk reward ratio. So you can see that if you follow this strategy strictly, you will be making the least $50 in a single trade. So let's do a simple calculation of this very $50 per trade in this very area. Let's say, for example, you take this buy opportunity to the upside, and then you are using a minimal lot of 0.05. Let's consider you have a very little account. Remember, we are trading the usdjpy. So let's say you use 0.05 as your lot size, and then you multiply this by, let's say, for example, in this case, we have 190 pips as your take profit target. So we have 190 pips right here, and then you multiply this by your value per pip for USDJPY, which do change. For example, we have $8 per standard lot for USDJPY. If you don't know that calculation, check the channel for the calculation on how to know your value per pip. If you equal this, we have $76 profit, which is 2 times your risk. This is very, very important. And then if you look at this also, this is even more than $50. If you look at this very area as well, if you take your calculator and you do the simple calculation with a 0.05 lot size, and then you multiply this by the number of pip, which is 229 multiplied by 8. If you multiply this, you are having $91 profit, okay, and this is 2 times your risks as well. This is very, very important. If you do same for this very area on the sell position, where we see a sell opportunity with this strategy right here, it is covered that you will have massive profit as well. So if you do the same right here, we have this very target was up to 192 pips at this very point. So we have 192 pips, multiply this by 0.05 lot size, and then you multiply this by the value per pip, which is 8, and then you have this. So this is very, very simple and straightforward strategy that can make you $50 per day in a single trade. So if you look at this strategy as well, the first thing, the second rule, the third rule, the fourth rule, the fifth rule, and the sixth rule, you must follow this rule very, very strictly. So this is how you can trade this strategy for making $50 per day. Please support this channel by leaving a like for this video, subscribe, and turn on the bell notification to receive more updates like this. Also check the channel for other forex videos and technical analysis. One thing very important, check the description of this video. You see my recommended broker and register right away. And if you want to learn how to trade forex profitably like a professional, check the description of this video, see a contact, and reach out to me for an intensive forex training and mentorship program. Thank you very much for watching, and I will see you in the next video.